Hello and welcome to the latest episode of No Accounting for Taste with me, Matthew Ord, and the familiar voices of Accounting Web's managing editor Richard Hattersley.
Hello everyone.
And technology editor Tom Herbert.
Happy New Year to all our listeners.
It's our first episode of 2025 as we return from our festive downtime, and Tom, you've got yourself the honour of kicking off proceedings with all things bench.
Yeah, quite a juicy story, one that was pretty much filling up my social feed for the entire Christmas break. So if you hadn't heard of them, particularly our UK listeners, Bench provided online bookkeeping to small businesses. They were sort of, I guess, accounting firm and accounting software. And I think a key point to note is that they had their own proprietary ledger system. I'll come back to that in a second. But yeah, as I say, essentially both accounting firm and accounting software, based in Vancouver. On their website, it said trusted by 35,000 American small business owners. I think looking at the article on TechCrunch that sort of does a deep dive into this, they had about 12,000 customers a little while ago. They'd been backed by more than $100 million worth of venture capital, including a $60 million Series C raise back in 2021. Strategic investments from Shopify and, closer to home, Sage, as well as some venture capital partners and debt financing. The platform had expanded rapidly. They had, I think at one point, had about 700 employees, sort of obviously bookkeepers, but sort of back office staff and salespeople as well, but they'd shrunk that down. I think there was an effort to sort of make it more streamlined, shall we say, the venture capital playbook.
So what happened, Tom? What's the story?
Yeah, so 27th of December, they posted a statement on their website basically saying, we're shutting down, just abruptly ceased operations. We regret to inform you the Bench platform will no longer be accessible. So apart from the notice, the company's entire site went down, leaving its 12,000 customers without any access to their financial information. So that the statement said, we know this news is abrupt and may cause disruption. Really? You think so? And so, yeah, it sort of added that there would be updates posted later, suggested they file a 6-month extension with the IRS. Obviously, American tax years run 1st of Jan through to 31st of December. And so, yeah, probably a sort of worst case scenario for its customers, really, that the accounting provider using its own ledger, I said I'd come back to it, locking users out of their key financial documents right at the end of the tax year, and so they can't access their information. And so, yeah, caused some serious issues, and as I mentioned, there was pandemonium online. I mean, LinkedIn users were losing their minds over it, and there was a rather unedifying spectacle of other providers sort of swooping in and mopping up customers, as it were.
I bet. Now, abruptly ceasing operations is quite the move, isn't it, Tom? Especially that time of year. Do we know why?
Yeah, details have been pretty scarce. As I mentioned, TechCrunch has spoken to a couple of insiders, basically saying that the bank had called in a secured debt due to a broken debt covenant, and so that was that. They'd pulled the plug. There was no more money to make payroll, but yeah, the timing couldn't have been worse.
And what happened next?
There was a twist in the tale. So presumably, 30th of December, presumably their poor customers had spent 3 days sort of scrabbling round looking for alternatives. But yeah, 30th of December, the closing down statement was replaced with a further statement saying that Bench would be acquired by a tech startup called employer.com. Hey, great domain, you might think. Well, yeah, it should be. They paid nearly $500,000 for it. So yes, it's a new startup that has only really come to fruition this year. And as I said, I think from the close down of Bench, there was a load of media coverage off the back of that, and its CEO, I think, told TechCrunch that he basically hadn't slept for 72 hours, sort of fielding calls to snap up their customers, as it were. I don't think employer.com seemed to specialise in sort of HR and payroll rather than accounting, but I guess any port in a storm for this particular ship. I'll stop the metaphor there, I think. But yeah, apparently the statement said the deal would ensure a seamless transition for Bench's customers to employer.com. They basically said that the company will revive Bench's platform and customers get the option to either log in, obtain their data and carry on with their service plans, or download their data and go elsewhere.
So with that roller coaster of activity having happened, what's the current situation, Tom? Where are we now?
So I think, as I said, customers have the choice to either keep their current plan under the new ownership or download their data. Bench customers seem to have been contacted to ask whether they want to opt in or opt out. Those who've opted in, I had a lovely evening on Reddit the other night looking for Bench customers, and several had said that they now have access to the platform and their data again. Those who've chosen to opt out seem to have been promised an email with the data download link by the 15th of January, so a week from when we're recording now. But I mean, I guess it's still not a great situation because they've already paid for a service. If they want to switch to an alternative provider, they still need to get that data out of Bench and essentially pay twice for the same service. They've had the inconvenience also of finding new bookkeeping services and possibly the risk of tax penalties if they're not able to access and process the documents in time.
And what's happened to Bench's bookkeepers and other staff? Because we obviously think about those people here too, don't we?
Absolutely, yeah. So the Benchmates, as they were colloquially known. Again, not many details released about them. The employer.com CEO Jesse Tinsley said his company had rehired hundreds of employees in a post. And again, that word rehired is doing a lot of heavy lifting there, because apparently in some cases they've rehired them on 30-day contracts just to sort of ensure continuity, as it were. But I think from the posts I've seen from former Bench employees on Reddit and LinkedIn and things, it looks like career opportunities are fairly scarce, and the real kicker is that those employees who were let go on 27th of December are not going to get any severance pay, which, is not ideal.
It's a rough read, yeah, for sure. Now, in the nicest sense possible, to get a wider picture of what's going on, why should we care?
I think whenever I write about the sort of stuff that goes on across the pond, I get the same sort of hardcore of readers just saying, why are you writing about American stuff? I personally think it's a really important story to cover because I think it reflects where we are in the accounting industry at the moment, and it speaks to a few different trends. So, I mean, as well, there are a few comparable businesses in the UK doing similar things, not to this scale, not with 12,000 customers, but, the idea of firms or software charging rock bottom prices to capture the market before jacking up the fees, I think is a fairly applicable one across the board, as it were.
And in a similar sense, what does this say about the ability to access that kind of data when a provider like Bench falls? Because I'm assuming that can kind of, like for like, if it were to happen over here, we could probably learn some lessons, right?
Yeah, absolutely. And one of our regulars posed the scenario in the comments section where Making Tax Digital had gone live, and the supplier of cloud-based bookkeeping software had gone down in a similar way to Bench. Not only can you not access your data, but also how your first quarterly updates of the year were arrived at, and everything else you didn't need to file that final update, as it were, has disappeared. And you're basically going to be penalised a whole bunch of times over by HMRC for something that isn't your fault. But yeah, as I say, it really raises questions about access to data and adopting cloud-based solutions without checking your data access contingencies first. I mean, the UK does have quite stringent data protection rules. Basically, you own your data, as it were, but that's the theory. But getting access to that data when something like this happens is a bit more difficult in practice, as it were. The ICO can threaten to fine these people, but if they've closed the company down and buggered off to the Cayman Islands, then, they're not really going to care. So I think it's not an extreme case, but it's quite rare that you get these collapse companies that act as both firm and software, but if it serves as a sort of warning flag for something that has happened, then might happen in future, then it's no bad thing, I guess.
And are there any warnings in this story about the danger of using technology without having that proper oversight?
Yes, I definitely think so. According to the insiders, I mean, both that I saw on Reddit and in the TechCrunch article, Bench's platform heavily relied on machine learning to categorize transactions, but firms and customers were reporting issues in terms of accuracy, in terms of excluding allowable personal expenses. In one case, an accounting firm who'd taken a client from Reddit said that they'd missed about $25,000 worth of missed tax refunds over 3 years, and it just wasn't working in the way that it had hoped, and it was actually resulting in a lot more work for human bookkeepers sweeping up after it, as it were. And there was quite an interesting line from this accounting firm, just saying AI can be a good first pass tool, but it doesn't understand the strategic implications of categorization decisions. So, I think that, as I said, it sort of puts AI in this particular aspect in its place, as it were, improving, but still a long way to go.
And you mentioned venture capitalists, Tom, at the start of this story. What part have they played in this?
Yeah, so as I mentioned, back in 2021, there was a large injection of cash, at $60 million, that came with it. And so Bench's co-founder and its former CEO, Ian Crosby, posted on LinkedIn after Bench had shut down that essentially, once the cash had come in, the venture capitalists on the board essentially moved him out of his position and replaced him with what they'd called a professional CEO. So in this case, the CFO, who then proceeded to go after profitability first, sort of shrinking that expenses line, as it were. And so he was basically sort of saying he'd been battling with some board members over a new strategy that he felt would destroy the company, and he opted to resign rather than continue. So yeah, I think it's one of those that, I think from reading the insider accounts, the venture capitalists had decided that actually they wanted out, and so when the bank sort of pulled the plug, as it were, that served as quite a nice full stop for them. I guess it's sort of trying to work out who's invested in your software provider of choice and how invested they are in the accounting industry and its customers is an important thing to say on this.
Well, thanks as ever for the deep dive there, Tom. A fascinating story to start the year, it really was. Richard, we're under a month away from the tax return window being snapped shut. So with that in mind, you've taken a look at how things are shaping up for accountants and tax agents as the 31st of January creeps into view.
Yes, January is here once again, and I'm sure whilst most of the UK is far more concerned about whether they're keeping their New Year's resolutions, most accountants are only concerned about one thing, and that is, of course, tax returns. And I feel as if this segment should come with a trigger warning, because I've already mentioned tax returns, and even the thought of it is maybe making some of our listeners break out in cold sweat. And maybe even Tom's story previously didn't help matters, with many concerned that if something like that happened, my God, how will I be able to cope? But I'm sure the last thing our readers want to hear about is more about tax returns. But it's the only thing that's going to be on the tip of everyone's tongues this January. And in fact, I think many accountants, tax agents, and taxpayers haven't been able to tear themselves away from tax returns even over the festive break. So this is prompted by a press release from HMRC. They always release these press releases just after the Christmas break. They release these press releases, all the numbers of tax returns filed. I think it's a way to encourage more people to file, kind of showing that these people didn't bother doing their washing up on Christmas Day and they filed the tax return instead. So have you got a tax return to file yourself? Let's look at the stats then. So Apparently, 40,000 filed a tax return over the Christmas break. This is broken down into apparently 4,500 on Christmas Day, nearly 12,000 on Boxing Day, and around about 23,000 on Christmas Eve. So quite a few being submitted there. And then a further 25,000 filed on New Year's Day. So it's kind of a quite a heavy chunk there being filed, but this goes to show that despite what people have been saying, people say that they're trying to file earlier and earlier every year, but it's still going up towards into the wire.
I'm not actually that surprised by the Christmas Day stat at all. What is it? 4,000, you said? I mean, if you think about them, there are plenty of people in this country who don't celebrate Christmas either for religious reasons, or might be there might be a sort of family issue or what have you. So yeah, I'm surprised it's that low, to be honest.
And I'm sure any excuse as well. There's, as you said, plenty of people who don't celebrate Christmas, and also it's a long day as well. And if you get dragged into board games or sat in front of television, it's a nice way to break up the day, isn't it? Just to nip off and do that instead.
Yeah, maybe a sort of filing your tax return via the medium of charades. Yeah.
I can only hope those that chose to do it on Christmas Day did spare themselves an hour and a half for the Wallet and Gromit Christmas special, which I'm sure we could mull over for the next hour and a half ourselves, but we shan't. We shall continue. There's obviously been, like you said there, Richard, plenty of filing done over the Christmas period. You'd assume then that means there aren't many tax returns left to submit?
Well, unfortunately for the 5.4 million taxpayers who still need to submit a tax return, there's still plenty still out there. I guess the good news is fewer than last year when there was 5.7 million taxpayers who needed to file a tax return. But I mean, let's face it, that's pretty much the same. It's not a massive amount of difference between the two there. And this number actually is quite weird because last year it was 5.7 million. The year before that was 5.7 million. And then the year before that in 2021, it was 5.4 million. So it's basically the same number for the past 5 years or so, as far back as I've managed to track over just before recording. So if my back of a cigarette packet calculations are correct, that probably leaves around about 6.5 million taxpayers still needing to file. So still quite a few. We're not even halfway through the number, which is still a heck of a lot of taxpayers who still need to file. And presumably that means that there's still an awful lot that's still sitting on the desks of accountants up and down the country. And again, it also, to labour the point again, also proves that tax return season, busy season, is that for a reason. It still remains to be busy season. January is still that time when people focus on that.
So with that in mind, we've lived with self-assessment for a couple of decades at this point. Are accountants more organised, or is there just something in us, something in our human nature, where a deadline is a deadline for a reason and we're going to work up to that no matter how much time you give us?
I mean, personally, a deadline for me is the day when a job gets done.
Yeah.
And that's essentially how, why tell me the deadline if it needs to be done before? And I'm sure many people have the same thinking, the same philosophy. We just look at the numbers there, where there's kind of doing the quick calculation, about 6.5 million people who live by the same philosophy. Is the deadline's there for a reason, and I think over the decades that we've lived with self-assessment, despite many accountants trying to train their clients, maybe set internal deadlines and enforce even things like surge pricing to get information in sooner, people are still stuck by the idea that January is the time when I will do it. It almost becomes a bit like Groundhog Day for an accountant, I'm sure. Kind of every January is kind of the same. And then when February comes round, whether it's a taxpayer or an accountant, they vow to do it differently next year, but the next year comes and they still fall into the same traps. But I suppose it's a nice problem to have if you're an accountant, where you approach January and it's a good opportunity to grow your business, whether that is taking on more clients who come knocking on your door. And also, it's partly maybe not their fault as well that some of this happens at this time of year, where everything gets bottlenecked in late December, January. There's other issues that do pop up throughout the year. The main job of the accountant is not just filing tax returns. There's plenty of other things that they do throughout the year. So why not just do it as it comes along, as that becomes the most pressing issue? There's other issues, including previous years. There's been agent dedicated lines being restrictions added to that, and also capacity problems. We've had the basis period reform as well for accountants to get their head around. Even some accountants perhaps realizing that they've not got the right tech to do the job at hand, so they may look into that, which may cause a slight delay in their processes. So many of issues do pop up, and so whilst we do have many who say that they are done and dusted by October, I'm sure if you go speak to them on February the 1st, they'd be probably telling you that they were still working by the midnight, or by candlelight as the clock struck midnight, in order to file the last tax return.
So where are accountants this year, Richard? How are they getting on?
So every year we always have on a counter web probably someone drop in on our forum, maybe in kind of a gloating fashion, to say that they've done their tax returns. That's done for the year, and for everyone else, all of our other readers, to just tell them to stop gloating so much. I think we've only had one of those. I've only spotted one of those, and the rest seem to be chugging along. Take LJ Case, for example. They commented on a recent post: as ever, despite nagging once a month since July, my firm still has about 20% to submit, with some still waiting for a signature. They went on to say, my staff say I should stand firm with my usual annual threat, and not to do any that come in this month, but I'm a softie and I always get the whole lot in by 31st of January, which I think probably speaks for a lot of accountants listening as well. And frankly, I think some kind of enjoy the busy season. As John Jenkins said, a regular reader on the site, they still have 67 at the time of posting this comment, and they said they love it. It sharpens the mind and they never feel this much alive during the rest of the year. And they say they work better under pressure. And also, I know from experience looking at previous comments, some people like having that busy season in January when the days are darker and it's a bit colder out, and you can spend a day working, and when the summer comes round you can enjoy that without then extending those work days with tax returns as well, which I think is ultimately the good point. You do it how you want to do it, as long as it's done. And I think there's something about self-assessment season that excites the masochist in accountants. I think they really love that busy season, and I mean, who doesn't like sitting around swapping war stories of self-assessment seasons past? So, I mean, let's hear it for busy Januaries, and may it continue.
Smashed. And it actually came on the back of a bit of movement elsewhere in the years prior. So we had the Kingman Review in 2018, which recommended that the FRC be replaced by the Audit Reporting and Governance Authority. However, as noted by Stuart Brown of Duncan and Topplace in his audit reform article, which is now up on the site, this is yet to come to fruition, and there is growing frustration at how long it's taking. The CMA market study also made recommendations in 2019, concluding that there should be joint audits for all FTSE 350 companies, which would require at least one firm appointed outside the Big Four. And finally, we had the Bryden report that followed both and suggested 64 reforms. This included a separation of the audit profession from accountancy and increased requirements relating to prevention and detection of fraud by management and auditors. So progress has been, at best, slow, despite some ideas kind of floating around for a few years, with the King's Speech finally giving it a bit of a kick, and there now being some expectation in the air that things might get moving. And I suppose if we had this chat at the beginning of 2026, Richard, we would expect there to have been some progress, he says tentatively.
I don't think so. I think it just continues. If we think back, the collapse of PHS was 2016. At that point, that'd be a decade on. Carillion, the collapse of that was 2018. So what's that? Would be 8 years on at that point. It just keeps on rumbling along. There doesn't seem a sense of urgency around audit, and we can keep talking about it, but I'm not seeing a sense of urgency besides the people Maybe, actually, I'm not seeing a sense of urgency from anyone, to be honest. And I don't see that sense of urgency coming anytime soon.
I think one of the big issues that they have is around the fact that any attempt to introduce more strictures around this get labelled as red tape. And, you know, I think the new government is very keen to see itself as a friend of business and, you know, don't want to be slowing businesses down with all this red tape. But I mean, you know, say red tape, you know, BHS employees or, you know, the hundreds and hundreds of small businesses affected in the supply chain of the collapse of Carillion, you know, like there's got to be a balance somewhere. And, you know, as I say, it has, I mean, there's been a heroic amount of can kicking in this particular set of reforms. You know, the biggest disappointment for me, I think, has to be the fact that, you know, we were trying to go from the FRC to, you know, the Audit Reporting Governance Authority, ARGA, and we had a host of ARGA oven-based puns ready for the headlines, you know, cooking up an audit storm, you know, turning up the gas, you know, all these types of things. It just, you know, won't someone think of the headline writers, for goodness sake?
Well, with the FRC still in the picture, the regulator has quite recently expressed a desire for the whole audit market to work more effectively for those who rely on it as part of its draft strategy for the next 3 years up until 2028. It was keen to stress that audit quality has improved in recent years as firms have invested in people and quality management systems. However, it did add that for its 2020-28 activity, one of the especially relevant issues is that for all firms, regardless of size, there cannot be any room for complacency. A focus on quality requires constant vigilance and rigorous attention by firms, said the FRC. New risks and challenges also emerge, which require a forward-looking and risk-based approach. The largest firms, which have in recent years enhanced their audit quality, cannot rest on their laurels. That's all we've got time for today. Join us on the next episode of No Accounting for Taste for a roundup of all the big goings on. But until then, take care.